I'm Charlotte McLeod with investingnews.com, and here today with me is Lynette Zang, founder and CEO of Zang Enterprises. Thank you so much for being here with me. Great to have you.
I'm so happy to be back with you, Charlotte. It's always a pleasure.
Yes, I'm really excited to be catching up with you because so much has happened since our last conversation. It was only back in January, but since then, we've seen gold really go on the move, even hitting record highs. So, over these months, I've been hearing from a lot of people various opinions on what kicked off that increase in the gold price. And to begin, I thought we could start with what you think happened. What caused this gold price run?
Well, I think it's primarily technical. Yes, there are a lot more geopolitical issues, and the inflation has proved stickier, which is not a surprise to me, but okay, to the central banks, and all of those normal reasons. But in reality, gold had broken out and been suppressed, and there had been a triple top going into a quadruple top. But once it hit that quadruple, which means that the price went up and hit a level, and then it was pushed down, went back up, hit a level, etc. And it did it 3 times going on 4, which quite frankly is very, very unique in the markets, and it builds a foundation. So what happens though, when you suppress a price, you suppress a price, you suppress a price, and then all of a sudden you don't, it shoots in a direction. So that is a big part of what I'm seeing with gold, because even though it had a breakout, oh, I don't have the chart right in front of me, but the original breakout was maybe 2 years ago or something like that. And then it was just suppressed, 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 which you can only do that for so long. And even at these levels, gold still remains severely undervalued.
Okay, really interesting to get your thoughts, and always appreciate the visual representations that you bring into the conversation. I think a lot of people feel that this was something that was building, and finally now it's playing out. So we've got a lot of paths to go down. One thing I wanted to highlight, I saw you mention elsewhere that although, we've had this breakout in gold, it actually started to happen much earlier in the collectibles market. So I'm wondering if you could go into that and explain why that's important.
Yes, exactly. When you look at the spot market, that is a contract, and it is cheap and it is easy, and it's just about trading and just about suppression. They can create as much digital gold and silver as they want very, very cheaply. But in the collectible market, that is a physical only market. So that's where you see true price, demand, supply, demand, discovery. You don't see that on Wall Street, because that's just a trading tool, and they can create as much of it. And in fact, with the Bank for International Settlements, the central banker's central bank, this is something that they've tracked over the years, but they always change formulas, so you can't really see what the truth is. But before they got so involved with it, when it was more truthful, they showed 62,000 ounces of digital gold, which is gold that does not nor ever will exist, to each physical ounce. So that's what you can do in the spot market, but you cannot do that in the collectible market. And that's also in another category. It's where you can also look at what the 1%ers and the real wealth in this country are doing for themselves. So we had a breakout in the ultra rarities, and a lot of those coins will go for like 15 million bucks, 10 million bucks for 1 ounce of gold. Well, who can afford that really, but probably 1% of the 1%, right? So you can see that the people with the power and the money that can influence others, you can see what they're doing for themselves, but they do not want you to do that for yourself, because they want to transfer your wealth their way. They'd prefer you, central banks would prefer you just stay away from gold, period. But if you're not going to, they want to direct it.
Okay, this is really fascinating. So thank you for going into that. And I thought that would also be a good path into looking at You were very particular about the type of gold that you own. And I know we've gone over this before, but maybe we can just briefly go over that for those who may not be familiar with your strategy.
Absolutely. And honest to goodness, it starts with my Uncle Al back when I was like 10 years old. And that would have been 1964. And at that time, it was illegal in the US to hold more than 5 ounces of gold. And yet, I mean, my Uncle Al was a major antique dealer. So I know how the tangible markets move. And my parents and I were at his house one day. Remember, I was 10 years old, so I didn't really understand the significance of this. But he took us in a back bedroom closet and he said he had two tall floor safes and he opened the doors and he said to us, if anything should happen to Aunt Bertie, she will be well taken care of for the rest of her life because of what is in these balls. And what he had in those balls were a whole bunch, like you couldn't fit one more pre 1933 gold coin in this form, in raw form. Back then, it was just an ounce of gold. So, what I saw, he had at least 3,000 ounces. Knowing what I know now, I can think back and go, oh, I got it. But he was holding that legally. And it was the only way that you could really hold it legally without oversight. And this is key, use it in the normal market. So it goes back to those two different categories. What most people do, and if you're holding some gold inside of an IRA, all you can hold in there is bullion. That's new stuff. I can't even show you any because, well, I guess I can show it to you. It's in my bracelet, right? But I don't own it because I believe that desperate governments do desperate things. And history shows us that one of those desperate things is to confiscate sound money. So confiscate your gold. So I want to be in the category that is much less likely to be overtly confiscated, because price manipulation is certainly a form of confiscation. Inflation is certainly a form of confiscation. They just don't want to call it confiscation because then you think about it differently.
Certainly, I think you do. And I want to talk about some trends in gold buying because I think it illustrates that people are starting to wake up to this way of thinking. So I think in our previous conversation, we talked about Costco selling gold. And since then, we've had this gold beans trend in China. And just recently, last week or so, I was reading about South Korea selling gold even out of vending machines. So curious to get your take on these developments.
Oh, wow. Well, not just at Costco, but now at Walmart and Amazon as well. And this really excites me. Not that I think anybody should buy it that way, because you also have to know there's a whole strategy behind it. But what it shows me is that the general public, whether it's here in South Korea, in China, they are waking up. The general public is waking up. And that gives me tremendous hope because that's who we need to wake up to what's happening. They're starting to buy gold, and that thrills me, because if we can get even 3% of the public to have a quiet revolution and convert their fiat money into sound money, physical gold and physical silver, it's all we have to do for a quiet revolution to have a seat at the table to the CBDCs or whatever the next iteration of the fiat money controlled by those central bankers and governments. It's the only way that we've got a shot at having a seat at the table, is if we put ourselves there with this quiet revolution.
I think it's so interesting to see this unfolding. And before we go on to moving down some of these pathways that you've outlined, I want to ask about the gold price. And I know predictions aren't necessarily what you focus on, but price potential for gold in 2024 and beyond. I'm sure the audience is curious to hear your thoughts.
Well, I would not surprise me to see it hit at least $3,000 this year on the spot market. And what that really indicates, and the price action that really indicates, is this huge underlying demand that is actually likely overwhelming the central bank's ability and the it's not just the central banks, the commercial banks' ability to manipulate it. So I could easily see 3,000 by the end of this year, maybe more.
And that really doesn't even sound too outlandish anymore. I could certainly see that happening. And just briefly, I wanna take a look over at silver. I know a lot of our audience is focused on silver, and when they look at the price of silver, they see gold at these very historically high levels, and silver, of course, way off of its all-time highs. And I wonder about how you see silver right now.
Well, number one, when I look at the chart on silver, it looks to me like it is concluding what we call a cup formation. Now, a cup formation, so that means the price is going like this, right? And gold did that too. It just did it earlier on the spot markets. So what that means is I think that this year we could easily see spot silver somewhere testing the highs, so about 48 to $50 an ounce. But in either case, gold or silver, you're looking at the spot market, and that doesn't really reflect its true fundamental value. And Charlotte, I feel so strongly that we all need to understand what the true value of any asset or instrument is, because ultimately that's where it's going to go. And so I ran these numbers not that long ago, so they'd be pretty accurate. And if we had that overnight revaluation on a one-to-one basis, which is not likely, but still, where we are in the debt markets and the amount of gold, it's simple. You just take all the debt that's been created, you divide it by all the physical gold that exists in the ground, above the ground, doesn't matter. And you're looking at the true value of an ounce of gold at 40 grand. So even if you're looking at a $3,000, a $10,000 spot, a $20,000 spot, it's a severe bargain. Silver, if we went back to the original ratio, which is a 20th of an ounce to one, right, then silver would be somewhere around $2,000 an ounce. So, and the more, and understand this, the more debt that has grown, which is the only tool that central bankers have, the more debt that's grown, the higher those numbers go. And none of that reflects all of the leverage, those derivative bets that are in the markets on gold and silver. None of that even reflects that. So that may sound outrageous and outlandish to people. Though I'm sure if we went back to 1913, and this is a $20 gold coin, and somebody said, one of these days you're going to see this at $2,500 an ounce, that would have sounded outrageous. Just look at what happens when they do those overnight resets. That is when gold starts to go to its fundamental value. Venezuela, I think it was up like over 3,200 times. Recently with Argentina, they did a 50% overnight revaluation, and we see gold starting to go to its fundamental value. So it's not really outrageous. What's outrageous is this. That's what's outrageous. And putting any value in something that they can just push a button and create as much of it as they want so cheaply and easily. That trusting this, working for this is what I think is really outrageous. And I'll tell you something else that I just ran these numbers, so I'm going to be off because I don't have them right in front of me. But going back to 1971, the BLS, Bureau of Labor Statistics, states that in 1971, the average wage was $10,290. And a family of four could live with one wage earner on that $10,000, 10.3. Well, if you divided that by the gold price at that time, which was $35 an ounce, and they had paid you in gold, it would have been 294 ounces. If you never got a raise, today the average wage is close to $64,000 a year. And so people would say, well, I'd much rather have 64,000 than 10,000, right? except you need two wage earners and you're paycheck to paycheck, right? So if you hadn't gotten a raise, but had just been paid in the same amount of gold, when I pulled this number the other day, which I think was the 10th, it was like $698,000 and change. I'm pretty sure that kept pace with inflation, and you'd only need one wage earner.
Okay. Oh, this is really important to keep in mind, and I think that example just really illustrates the points that you're making. So I want to go now in a little bit of a current events direction because we just recently got the latest CPI numbers out of the US. And it looks like in April, inflation slowed after coming in hotter than expected for some months. But we've talked before about how hyperinflation has actually already begun. So I'm hoping to get your perspective on these numbers that we receive and what's actually happening.
Well, they're fiction, as anybody that goes to the grocery store can see. And of course, it's not when they say that they're bringing inflation down, they're just talking about the rate and speed of inflation. And because they use hedonics, which means they can substitute one thing for another thing to make the numbers look however they want it to look, when you have more than 75% of the people in the country that are struggling to buy food for their families and do not have even $400 put back in case of emergency. And frankly, what would $400 do anymore? Not a whole lot. You know that it is a joke. So, do I think they're going to meet their 2% target? No, I don't. And they're talking about stickier. They're just trying to manipulate how you think so you don't feel like you need to protect yourself. So, yeah, I mean, the CPI came out, the PPI came out hot, right? In other words, the producer price index came out higher than they anticipated. The CPI, removing food and energy, came out a little bit lower than it's a joke. It's all just fiction.
Yeah, exactly. And you're so right. All the different language that they use to make it very confusing, all the different types of numbers, leaving things in, taking them out. It makes it so hard to keep track of what is really happening. So good to go into that. If we do look at this inflation, so on the surface, it looks like, if inflation goes down a little bit, that's good news for the Fed because they want to eventually start to look at lowering rates. But, as you've been speaking about, the debt burden remains enormous. And, at what point do the tools that the Fed is using run out of steam here?
Well, we've been really watching that since 2008 when they did their first QE and flooded the system with money. It was stimulative, and it definitely pushed the stock market back up and the real estate market back up and all of those things that they were trying to reflate. But every time they would come out with another round of this money printing, then quite honestly, it had less and less and less and less impact. And today, with all the stimulus that's out there, it's like pushing on a string. It doesn't have the impact. All it does is reduce the value of the currency that's already out there, making it harder for the average family to live and feed themselves and put gas in the car. And I mean, look at the cost of insurance and the cost of medical care and the cost of education. So inflation isn't coming, those prices aren't coming down. Maybe, and I say maybe, they are moving up a little bit slower, but they're still moving up more quickly. And look at what's happening with consumers who are supposed to support the world. We are a consumer-driven world these days, and the consumer is having trouble with all of the debt they've already accumulated. I mean, when you see people putting food on a credit card or food on those buy now, pay later plans, that is really scary. That is really, really scary, Charlotte. I don't know.
It is very scary. And one thing I've been waiting to ask until it's the right time is, all of this is playing out in an election year for the US. So I'm wondering how you see that playing out, how all these factors unify there.
That is such a great question. And about 50% of the world is also in an election year. So it's actually, bigger than that, or 51%. It's a lot. So my bet would be that they're going to try and hold it together through November. Can they do it? I don't know, because what we're talking about is, again, pushing on a string and the consumers losing confidence, right? This is all about public confidence, which is why that first question you asked me about the public buying gold is so critical, because what's really happening is they are losing confidence. That's what rapid inflation does, and noticeable inflation. So my guess is they're going to try and hold it together for this election year, but I don't know. Just like the breakout in spot gold, and look at the level of gold buying in the global central banks. The last 2 years, 22 and 23. I mean, that is the highest in recorded history that they've been accumulating. There's a reason for that. If we get through this year, maybe we won't get through 2025. If we get through this year.
Well, and I'm glad that you brought up elections are happening in so many other places. We tend to have a very US Canada centric focus on our channel, but are there any other elections that you're watching elsewhere that you really think we should keep an eye on and see what plays out there?
Well, I would say in general with all of them, because this inflation has been global, a big thing that I'm seeing that has me frankly really nervous, and why I say I'm not sure that they could do that, is the decoupling in behavior between the global central banks, where you have in some central banks that are raising rates, some that are lowering rates, some that are staying steady. But in the advanced economies, Switzerland has lowered their rates, while the US, everybody wants to lower the rates. Well, nobody questions, okay, why do you want to lower the rates? Because that inspires more debt. Right? That inspires more debt and spending. And, Wall Street, at the level that the stock market is absolutely ridiculous. Look at what just recently happened again with the meme stocks. Investing has become gamified, right? And there are addiction levels that happen in that gamification. Historically, that's never been a good thing. So I can't say, I'm looking what's happening in Turkey I'm looking more at how the central banks are handling the interest rates, really more than election, because frankly, I don't really get political. It's who's really driving this are the central banks. That's who's really driving this. The politicians are there to legalize the theft. And anybody that actually thinks that the central banks are independent, think again. Think again. They're not. Their job is to protect the banking system and the government system.
Really interesting to go over that divergence in the central banks. And I'm also happy that you had brought up the meme stocks. That's definitely a current news item right now. And, it's volatile. And you mentioned this addiction level and gamification of what we see going on there. But I had it in mind to ask you about, because it also seems to me that there's an element of community there. And I know you're all about community and unifying people against a cause. And there's also some of that going on there too.
Absolutely. And actually it's really interesting, because I recently went and attended and spoke at the XRP show in Las Vegas. And I've gotten a lot of feedback from people thinking that because I went to that show, though that's not the first crypto show I've been part of, that I have, shifted my feeling on cryptocurrencies, which I have not. However, to your point, and to building that community piece, community isn't segregated with just this little group of believers, right? We have to help educate everybody. So when I get people that say, oh, no, she's gone over there, really, people that invest in cryptocurrencies, unless they're trading them, it's really about getting outside of the system. So you have a similar thought process. The reception I got at a crypto conference when I was expecting a big fat goose egg was overwhelming, to be honest with you. But I will speak in front of any group. Put me in front of a group of stockbrokers, I'd love to sit down with a whole bunch of central bankers, right? But put me in front of anybody, because this is how we build community, not by segregating into a little silo anybody that thinks like we do, but helping everybody, including us, expand our thought process and be more inclusive.
Okay, interesting to hear about the warm reception that you got at a crypto event, because I always find that when I go to a gold or precious metals event and people mention crypto, it's kind of an opposite reaction where they definitely aren't getting a warm reaction. So is there anything more that you could say about that?
Well, yes, actually, there's a lot, because, again, it really all goes back to community. But what do the powers that be want? They want us all separated. Look what happened in 2020. All of a sudden, all of these groups were completely separated, and divide and conquer. If you're not having communication, then you can point a finger and you can get aggressive, and then you're not watching what they're doing to this stuff, right? So that's the plan. I so disagree with that. I want to include everybody. You don't even have to agree with me. Let's have an intelligent conversation together. Let's diversify. Let's make things happen by creating that quiet revolution. So, yeah, it was I, all I could tell you is I was blown away. I was absolutely did not expect that at all. I was absolutely blown away. It gives me a lot more hope, to be honest with you, because I think that I want to bring everybody together. I want to include everybody, right? And I think having different discussions on different things, you get to have your opinion. But here's a whole bunch of things now. Now you can make an educated choice. I'm very database driven. So every time I talk and in my YouTubes and all that, I give you the links, hold my toes to the fire. Go read that, do your own due diligence. If you disagree with me, I'm going to support your right to disagree when you have an educated choice. I can't say that my opinion is better than your opinion. If, however, it is an opinion based on hopium, then I hate to say it, but yeah, I trust my opinion a whole lot more than yours, because mine is based on facts.
Very fair, very fair. And that is really encouraging to hear. So as we begin to wrap up this conversation, I want to mention, of course, since we last spoke, you are now have your own venture, Zang Enterprises. So I want to touch on why it was the right time to make that transition and talk a little bit about what you've done so far. And one thing I'm really interested in hearing about is I know you're very connected with your audience. What kinds of questions have they been asking?
Well, timing is always a very interesting thing. When I went and did the shows in Australia last August going into September, I think I even told you this. I had all of this material prepared and I threw it out the window. And I just felt like I needed to start talking about community. And community has always been part of the mantra. But as soon as I started talking about that, I got chills from the top of my head to the bottom of my feet. And I absolutely knew that I needed to bring that more into focus. And I needed to be a facilitator to help people grow local communities as well as global communities. And I wanted to talk more about my mantra so that I can help people everywhere in the world be as independent and self-sufficient as possible. So that's food, water, energy, security, barterability, wealth preservation, community, and shelter. And so I was able to I have an unrestricted voice. That's what I'm going to say. And that's what really needed to happen. I could not have done this remaining under the auspices of ITM, though I wish them well. You know, I was there for 22 years. That's a very long time. And they are still part of the community. So that's the way I think about them as well. But I just couldn't fully express myself there like I can here. So we started, and I can't even tell you how fabulous the community and my team members are that are around me helping me do this. One person cannot do it. So I have my own little community around me that really helps. And they are the highest quality level people ever. I mean, you've met Jacqueline, right? Because every time you interview me, she's always with me. And you've met Dale, but I have a very large team here that really focuses on all of those different mantra areas, and every single one of them puts your best interest first. Period. End of discussion. We are here to be of service to, hopefully, I mean, this is big, but the world, right? And we want to make a positive difference. So at Zang Enterprises, we are all about education. You'll go to the YouTube channel at the Lynette Zang, and you'll see. But also, we just went live yesterday on our website, and that's LynetteZang.com, where we're doing all of this. And yes, we are positioning people into gold and silver. What we like to do is my original strategy that I developed after studying currencies since 1987, based upon repeatable patterns. But it really goes beyond gold and silver to encompass all the pieces and parts of the mantra. And that's what we get to do at Zang Enterprises. And it's fabulous. And support community and have patience with us because we're still evolving, but we have come a long way in the last 3 months. I mean, it's mind-blowing, the reception and the love from the community. I could not be more grateful and thankful, honestly.
Very good to hear. And so we know now the updated places where we can find you. We can wrap it up here unless you had any final points that you wanted to leave the audience with.
You know, we are so close. If you're procrastinating on getting into position, please do it now. With gold and silver, but food, water, energy, security, barterability, wealth preservation, community, and shelter. Community is the most important because I started my urban farm back in 2010. So I've had the 14-year luxury of making my mistakes and figuring it out. And thank goodness now I have some really good farmers that really know what they're doing. But we don't have that same time luxury. And that's why it's so important to come locally and create community, get to know your local food purveyors, your growers, your dairy farmers. Go out and volunteer a day, give them a day of your labor and create that relationship so that if the shelves on the food at the grocery store go bare, that doesn't have an impact on you, because we all remember what that was like not that long ago. And we cannot forget that.
Okay, I think that's a great message for us to end on. Thank you so much for coming on today to go over all these different topics. Always a pleasure to speak with you.
It's my pleasure. Thank you for having me.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Lynette Zang. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.